As we all know, small businesses have limited options when it comes to securing capital for their daily operations. We have personal savings, credit cards, small business loans, um, and I think what folks tend to realize over time is that these options aren't very stable in fluctuating sales periods, like so many small businesses seem to experience from time to time. Um, these these forms of debt financing create liabilities on your balance sheet. They negatively affect financial ratios such as your asset to liability ratio, your debt to equity ratio, and your debt to income ratio. And all these numbers kind of hinder any ability to obtain future loans or secure working capital from a bank in the future. Also, most small businesses don't really realize that they may not even qualify for a bank loan due to asset and capital requirements. That being said, as opposed to debt financing, we're going to look into ways of alternative forms of financing, particularly off balance sheet financing. And two forms of off balance sheet financing that we're going to look at today are equipment leasing and accounts receivable factoring. These options do not affect your company's balance sheet nor affect the ratios that we talked about or the financial strength measures that the bank typically would look at when being approved for future financing options. Equipment leasing is the ability to purchase equipment with rental payments, and it's a good solution to secure working capital as debt to equity ratio that we talked about previously doesn't change whatsoever, and rental payments are 100% tax deductible, which would counterbalance potentially higher rental costs. Also, at the same time, your need for equipment is obviously fulfilled. You might need a special new piece of equipment for your construction business. You might need some new trucks for your trucking business. Leasing provides an easy financial bridge to secure that type of asset. And well, that being said, you will gain a long-term asset on your balance sheet as well. So there are some benefits to equipment leasing, and it gives you the equity that you need without having to incur any debt like we talked about. The other option of off-balance sheet financing is accounts receivable factoring. And factoring is when a factor or the funding company converts invoices to cash immediately. And that benefits business owners who are experiencing strong periods of growth, and it gives them the opportunity to meet their operating expenses because of customers who don't pay soon enough. Factoring takes place after a good or service is provided and an invoice is generated and billed to the customer. The factor, or the funder in this case, purchases the invoice at a discount and advances the funds to the business upfront. Factor then collects the payments of the invoice from the customer when the customer pays. This process is pretty easy. It takes a short amount of time to set up. The ongoing fundings can take place within 24 hours or less. So, once you have invoices generated, you submit them to your factor, and most likely within 24 hours, you're going to have your cash. And small businesses usually do qualify because a lot of the qualification specs are not based on the credit of the business or the business owner, but the credit strengths of the customers. So even though you might have customers that pay slowly, if they have a strong credit history and a history of eventually paying their bills, they show a little bit of confidence that a factor can take them on. So it is a lot easier to procure funding from a factor as opposed to all the checks and balances that you have to go through with a bank loan. Factors keep a small percentage of the invoice as their fee, but businesses do benefit by gaining immediate access to cash, like we talked about, and this cash might be used to pay rent, pay suppliers, meet payroll, which is a very common one, and any other expenses. And this is, again, just like equipment leasing, this is all done without incurring any debt on your books. Call Factor Finders today at 1-855-FACTOR1 to learn more about how we can help you finance your growing business.